Yo, let's go. We're going live. We're going live today, baby. We're going live today. We're going live today, baby. Let's go. All right, I'm just getting stuff finished set up and I will be done. How's everyone doing today? Did anybody take a look at the new content today? It was fire. I had a troll come into the chat trying to troll me, and I ended up, you know, doing my thing, trying to help as usual. So that was like very fun and great. I was happy to get the engagement. I was happy I was able to at least provide some level of service when eventually he opened up. So so that was very fun. So stay tuned around 2:30 ish. I do tend to do lives for Q&As. So if you have any questions of how to build or repair your credit, that is a time that it is dedicated to you, my subscribers, to ask me questions. So be tuned. It's around 2:30 ish Eastern time. I want you to know. So I'm on the east side. So it's going to be Eastern time. So whenever time you guys have some time, hop into that live, ask me questions. I'm very open, as you can see in the other ones. And yeah, let's get it popping. I want to be able to get you guys to where you guys need to be credit wise, and then to get you guys approved for certain loans. And those are the great times, or even just here is also a great time for you to go ahead and ask me. Well, at least I think, because also there's a point that I'm doing this video. So, um, but yeah, but I'm excited and whatnot. We were about man, this is crazy. Jesus. All right, we're gonna open up this one, and we're gonna open up this one.
I did it. Imagine being able to build anything.
Oh, awkward, awkward, so awkward. All right. Remember, put ones in the chat um if you guys can hear me and the audio is in great shape and the video is in great shape is what I meant to say. Top fans, no, we're not doing top fans. No. Moderate activity reactions, participants. Oh, that's what I gotta do. I'll do all live chats, all live chats. All right, sorry I didn't see the live chats. I'm still new to streaming, so I'm trying to get used to everything. So definitely forgive me if I didn't see it yesterday. Okay, let's see. How do I? All right. Okay. I think I got that. Let me pop this up. Damn, I'm gonna need freaking two screens. Another additional screen. I was like, just dang, yeah, I'm gonna invest into another screen because I'm gonna need it. I have too much stuff open all at the same time. And make sure no other stuff is open. Don't need that dragging me down. Okay, so we got that with the Taskmaster. How we doing? How we doing on power? We're doing good. We're doing solid. Okay. Okay, I don't need this. I can close this. But everything else I do need. That's that. Front, back. Alright, I have two of these open, so let's just get one open only. Okay, let's bring that down. Alright, we are all set. All right, welcome to my stream. Let's go, baby. I'm excited. First off, I need to apologize. I was on the stream for an almost 2 hours, and when I finished, I realized that I was not sharing my screen. What an embarrassment it was. Oh my god. I was so embarrassed, but I was more mad than embarrassed because I dedicated so much time, so much passion into the video and, really try to make something out of it. And just to find out I wasn't showing you guys anything besides my face. But don't worry, I'm taking that video down, and this is going to be the new one. I made sure to make sure there was just some settings that were off that caused it not to be accurate. So that's all the time I'm going to spend on that. So my bad. All right. But I got you guys today, though. I got you guys today. So essentially, what we're going to be doing is we're going to be reacting round 2, baby. Me versus Lucky. He came out with a video stating how to get approved for auto loans, and that video was solid, but it wasn't enough to name it. This is how you get approved for an auto loan. He gave like little breadcrumbs here and there. You guys will see in the video. So we're gonna get started with that here today, and then also I'm gonna be giving you the real way of how to get approved. I'm gonna give you the inside secrets that he doesn't tell completely. Again, he gives you a little bit, but I'm gonna give you the whole thing. So stay tuned for this live. You're gonna get those secrets, and I'm gonna expose them this time correctly. So before we start, remember, if you need help with your credit, go ahead and put it in the chat if you need to, and I can send you my email and we can get you on the schedule. If you're new to my channel, welcome to your first live. This is we're gonna get it popping. You actually came at a good time because this is something new that I'm doing. So this is something that I'm gonna try to do every day, but at least I'm gonna try to commit to at least 3 times a week to do a live, going over reactions and whatnot. Anyway, I'm kind of too much of a side note, sorry, but let's go and get started. But since you guys are maybe not aware, especially the people that are new to my channel, I did a round 1. We're gonna react to round 1 first. In case if you don't have time to see it, I am going to put it in, if not in the chat, I will at least show it here right now. Actually, I'll actually do that right now. Let me show you. So this video that we'll be acting to round 1 came out 3 months ago. You'll see it where you'll see it says finance influencer was wrong. So essentially that's the round 1. So in case if you can't stay here for the whole live, you can at least watch round 1, and then round 2 you can watch it tomorrow. But without further ado, and before we start, just to give you a prefix, or at least some context, I am what is known as a credit analyst or a loan underwriter. Pretty much I am a person that makes decision on loans. Pretty much your applications that you submit, someone like me is looking at it. I am that guy, so I'm well equipped to handle these type of reaction videos. So you'll see, at least in this first round video, you'll see some of my credentials of places where I've worked for my credibility. And let's go ahead and get started. Round 1, baby. Let's go.
I didn't think I was going to make another one of these videos. I'll go and put the other video here somewhere so you can see it here after this video. Talking about another influencer and debating him. Now we have another victim. I gotta pick him.
I'm moving different. This shit ain't nothing to me, man.
Lucky Lopez. This guy is someone who I watch. But this is something I disagree. He's trying to blame the delinquency debt on the lender and us, the people. Before we get started, if we need to...
He really had the audacity to blame us the people, that we're the reason for how things are happening in the car market. And you're gonna see it in this video how I point that out.
Well, with your credit, I'll go ahead and add a link in the description. And also, here are my credentials of where I've been a loan underwriter.
Take a look at that. That's where I've worked at. These are the places where I have worked at as a credit analyst or as a loan underwriter. Let's get to it.
I'm a person that pretty much approves and denied loans. So you have a person that's in the inside giving you their side. So let's go ahead and get started because this is about to get wild. All right.
Well, what's going on, YouTube family? Today we have a very interesting subject to talk about. Why do so many Americans actually buy cars they can't afford? Now, I'm currently in a repo convention here in Orlando, and for the last 3 days, we talked about all the things plaguing regular people buying cars and why so many people are defaulting. Now, a lot of the answers are very easy to explain, but some of them absolutely make no sense, and that's kind of what I want to share with you today, and actually point out some of the flaws with the thinking of most American buyers when it comes to purchasing cars. Now, one of the things that I believe that was a major cause for this was the actual lending part. Now, at the end of the day, nobody can force you to sign paperwork. Everybody that's complaining I was taken advantage of, I bought a car I didn't want, not true. Nobody can hold a gun up to your head and say, hey, you have to buy this car, you have to make this $1,500 car payment, blah, blah, blah. A lot of people got themselves way over their heads and didn't think long term, and now it's starting to bite everybody in the butt because they can't make their payments, and now we're seeing record high delinquencies, record high defaults, and record high deficiencies. All these things combine into something that's really, really bad. Now, if you guys are
Okay. See how he's trying to blame the lender and us? He's missing somebody. You want to take a guess?
Wait for it. Here it comes. Almost there.
The dealership. Awkward. Like, why is he even mentioning the dealership?
That's suspicious.
They also play a part. I get what he's saying. The lender does play a part. The consumer does play a part. But the dealership plays the worst part of them all. You don't believe me? Let me show you. Let me show you. Check this out. Check this out. Here is back in 2022. Showroom shocks. Dealer jacks up truck MSRP 43%. So,
all right, before we continue, put twos in the chat if you can see the screen. I want to make sure you're seeing the video and I'm not wasting my time again. So put twos in the chat if you do see the video. Because I know the audio is working.
Let's take a look here. So we have a man from New York City expressed his outrage on social media after he found out that a Ford Bronco had a retail price of $34,000 and now it's being sold for $49,000. A market adjustment of $15,000. Awkward.
Awkward. So awkward.
So he's out here trying to put the blame on us and the lender when he's not even mentioning the dealerships.
Stop it. Get some help.
We'll even see if he even does. But that's something that really frustrates me because the lenders, they should have known better. They should have never exceeded the loan to value of giving more value than what the vehicle's worth. Have stricter payment to income, which pretty much restricts people passing certain monthly payment on their cars. Value than what the vehicle. They shouldn't. That really frustrates me because the lenders, they.
All right, let's take a look at. We're gonna take a look. I'm gonna read this because obviously, as you're watching the video, you don't get to see this part. So let me read this. So it says, if you can see it here on the screen, it says many traditional aspects of indirect auto lending have changed, owing to significant competitive pressures exerted by captive finance companies, captives of automobile manufacturers. In response, many banks have loosened underwriting standards and relaxed procedures to become more borrower friendly to compete with financial concessions of competitors. So essentially what that is meaning is that they just made it easier for you to qualify for loans because during the pandemic, you needed to compete with other financial institutions. So when you go to apply at a dealership, they send your loan to multiple people. Where that's where then you have to go ahead and compete with all the other lenders. So it's like who's gonna give you the better call. So sorry for that. I forgot to turn off my notifications. So yes, so it's like now the lenders are fighting for your business. So it's like who's gonna give the most easiest call, and we'll get more into that on round two. But I just wanted to read a little bit about that so you guys can have a little context, since trying to listen and read at the same time it is difficult. So let's continue with the video.
Should have known. They should have known better. They should have never exceeded the loan to value.
All right, let's read this right here. All right, so loan to value ratio. So loan to value, just in case if you don't know what loan to value is, it's pretty much how much you're going to be borrowing based off the value. So an example would be, let's say if their car is worth 10,000 and you're going to be borrowing 5,000, we know that's 50%. So that means you're borrowing 50% of the value, and the bank is going to give you that $5,000 and you'll pay the bank back monthly. That's essentially what loan to value is, in case if you are new to it. So let's read this real quick. Loan to value ratio detail for consumer financing negative equity in comparison to other consumers. So pretty much it's just saying the graph of how much people are going to negative equity. Negative equity is if I at least assume 60 to 70% of the people that have finance through the dealership is when the dealership doesn't want to give you pretty much the full amount of what your value is. So instead of paying it off, they're gonna pay it off, but they're gonna give you less of what it's worth, and then they're gonna put it into the new loan. So it's like you're getting more money additionally than what is being borrowed. So that's just what this graph is just showing, how many people are putting in negative. So like if back to the example of the 10,000. So imagine if the car is only worth 10,000, but you put in an additional 10,000. Let's do another number. Let's do additional 7,000 of negative equity. That means now you financed what is that, like 170%? I think that's what that would be. Let me double check that here. So it'll be 17,000 divided by 10,000. Yes, so I was right. So that would be 170%. So that means you're over 70% of the value. So that means if you wanted to sell that car tomorrow, no one's gonna give you 170,000. No one's gonna give you $7,000 more than what that car is worth. It's only worth 10,000. So that's essentially what negative equity means. So go, if you don't understand, which is okay, put it in the chat. I'll try to get to those questions later, and other questions that you also have. Definitely put them in the chat. I'll try to get them towards the end of the reaction. So yeah, so that's essentially what negative equity is. Let's continue on reading. Okay, so it's showing so 25 percentile, median 75. Okay, so these data show that the LTV ratios for consumers with negative equity range higher than consumer in other equity positions at the start of their new loan. While only a quarter of the consumer financing negative equity had LTV ratio of 108 or lower, 75% of the consumers with positive equity trade-ins had LTV below 108. So essentially, if we're looking at this graph, so we're going to be comparing these two. So this is positive. So when it means positive, that means that the people got the value. People got the value for what they're asking. So if their car was worth 10,000, dealership ended up giving them 10,000. So we're gonna be looking at this. So negative here. So if we look at the 75, or just in general, we can see more people are not getting their true value for the vehicle, which is causing them to be over the 100%. So that's essentially what this is explaining. Let's go ahead and continue with the video.
Value of giving more value than what the vehicle is worth. Have stricter payment to income, which pretty much.
All right, so weakening performance. The growth in loans with higher PTI ratios seems to be one of the characteristics shared among the four issuers that is driving the weakening performance of 2023 in certain 2024 transactions. Mercedes, Volkswagen, CarMax, and Carvana have increased the percentage of loans with PTI greater than 10% in their 2023 and certain 2024 pools, and these loans have had a disproportionate share of charge-offs. Mercedes-Benz, the percentage of loans with PTI ratio greater than 10% rose to approximately 30%. Number on based of loans and not dollars. Our analysis on dollar basis yields similar results. For 2024 transactions compared to 17, okay, that's just getting into that. So essentially what this is saying is we will get into this in maybe if it gets mentioned in the video, but there's this thing that's called PTI, and all that I'll just say is that is similar to what's called a housing ratio when you get a mortgage. It's certainly like they just put a cap on what you can get as a monthly payment, regardless what type of car amount it is. As long as you don't exceed that monthly amount, you're okay. So it looks like they had a minimum. Mercedes had a minimum of 10% for their PTI. So that means if you made $1,000 a month, 10% of that would be $100. So you couldn't make $100 payment. So that's just pretty much what PTI is just saying. So Mercedes essentially went ahead and went above their own 10%, and then they saw that they had a huge loss. It backfired. A lot of people were letting their cars go to repo. That's essentially what this is saying. All right, let's get back to the video.
Restricts people passing certain monthly payment on their cars. That's something that they do, especially in direct. How did I know that? Because again, I do this for a living.
Nice.
So it's very frustrating to hear this. And on top of that, let's go ahead and give some more proof. Let's put some more proof. Here we go. Let's take a look here. Here we go. Here is back in 2021. Yes, December 2021. This guy was buying a limited edition Honda Civic for $44,000. Look what these mother effers do. 69,000, practically 70,000. A $25,000 adjustment. That's back in May 2021. Tell me, Lucky. Explain it.
What he's doing. I can see it, I feel it. He's cooking.
Don't make it make sense. It's about to get even worse. Check it out. On December 21st, $50K. A total of $94,000.
That's how I feel right now.
Lucky. Why aren't you mentioning them? The people that played the part.
That's a great idea.
That's the thing I don't like about this video. He's trying to put the blame on two parties when he should be putting on the third. And it's actually their fault that a lot of people are into this. Yes, I agree that people do have control over choices. But when majority, not all, majority dealerships are giving market adjustment, as you saw. Let me put it again. Let's put it again. A $50,000 adjustment. Like, what can you do? And then the manufacturer forgot about them. He doesn't even mention anything about them. Let's go ahead and take it a step further. Let's take a look at this last article right here. And then I actually have a video towards the end to go ahead and put now verbal proof. This isn't just what you're seeing here. I'm going to show you a video towards the end You see someone talking about prices for a vehicle? Crazy. All right, here it is. This is in this year, in April 2025. How to avoid dealer markups. Here we go. 2024 Cadillac Escalade. Could never be me. $120 for the price of the vehicle. A $20,000 adjustment. Again, dealership, this is what they're doing. That's the reason why there's so much auto loan debt. They play a part to it. But, you know, don't take my word for it. I only just showed proof. What do you have to say, Lucky? You know what? I'll let you finish. I'll let you finish in the video.
Remember, during the pandemic, a lot of people bought cars they simply couldn't afford because the banks threw out all the rules. Typically, if you are a subprime customer, we want to see all types of stipulations: proof of income, residency, a track record. We would look at your credit history to see how many comparable lines of credit you had to get you approved. So if you're looking to buy a $40,000 car, but you've never paid off a $20,000 auto loan, more than likely, we would not give you any type of lending, and that was the most important part. But all of a sudden, everybody threw the rules right out the window. I had friends of mine that literally paid off a $30,000 Honda Accord, but then ended up getting financed for a $280,000 Lamborghini Urus.
I'm a co-sign him with on that. A lot of what he mentioned about the residency, the employment, I don't think he mentioned references, but that happens when you do a lot of dealer financing. They're gonna want a lot of that information. So I do definitely co-sign on. Let's go ahead and continue here towards the end of this, because this is insane.
Why they're wondering, well, why is everybody in debt? Why is everybody getting repoed? Why is debt going out of control? I hate to say it, it's because of how we think as a society. Everybody wants to show up and be flashy and do all this crazy stuff. And the perfect example of this is I'm actually here in an airport lounge and I'm looking around at everybody and I see so many people with Louis Vuitton and Gucci.
Alright, I'm over it. He keeps blaming the people. And look at this. I moved this up to 6 minutes. I'll leave the link in the description so you can see the whole video. And you're going to see he doesn't mention it at all. So I'll let you guys decide. Go in the comments. Let me know what you're thinking. And again, if you want to go ahead and sign up to go ahead and get some credit counseling, I can go ahead and help you. Send this video to Lucky. Definitely like to collab. And if you're definitely looking for an underwriter, Lucky, I'm right here. I'll see you guys next time. I'm going to go ahead and leave the video rolling that I went ahead and mentioned to you. And see you guys on the next video.
Okay, well, look, I can help you get there a little bit closer. Let's get you commission on a car deal. Let's get this car $1,000 below MSRP. Easy peasy lemon squeezy. Sorry, TSRP, because I'll use the proper verbiage. $1,000 below TSRP, no add-ons. I'll come by it today.
See, the only issue with that is the COO of our company has instructed us not to discount any cars.
Huh.
That's including our dealership and Lexus of Las Vegas, which are owned by the same family.
Why could you not discount any cars?
Because of the tariffs, you think they're not happening, which we got a press release from Toyota themselves. Tariffs are happening.
Oh, I didn't say the tariffs were happening. I said the price is increasing by 25%.
Yeah, because some of our parts are from Canada.
Yeah, that doesn't mean that your car is going up 25% because some of your cars are made in Canada, because some of the parts are made in Canada. But this car is in stock. Toyota has not increased. Toyota has not put any press release saying prices are going up. They said that there's tariffs and we don't know what's going to happen. But Toyota, unless they put it out in the last 2 hours, has not made any announcement on cars going up in price.
So you guys don't see that. We see things internally. We get emails.
You have an internal secret message to say that the prices are going up 25% and you can't negotiate because of that.
25%.
Then why won't you make a $10,000 bet? You have the sheet of paper to verify it. You would win. Ferrari only went up 10%. Why in the world would you guys go up 25%? Makes no sense. Ferraris they're made in Italy 100% with no American parts.
I can't speak for Audi or Porsche.
So you're saying this car is going to be 79 grand as of tomorrow.
April 3rd.
So April 3rd, this car is going to be 79 grand if I don't come by it. it today?
79 grand.
Are you just trolling
And
me?
me personally, I would make it easy. Just $1,000 below MSRP. Great. Move on. These are not museum pieces to me. But I'm not the CEO of the company. I'm not the general manager. These were their instructions. We had people walk away in the last few days because we are not discount cars.
That seems insane.
We're not even discounting used cars.
You guys aren't even discounting used cars?
No, we don't discount used cars. What are used cars? We're like CarMax and Carvana.
Okay.
Yeah, but if it's like a couple $100, you know, I can pretty much squeeze something out of the used car, the managers, and, you know, $500 off. So, you know, keep it moving, keep it going.
Is this just an April Fool's joke? Is this like a funny, haha, you got me? I can't tell if this is a joke or not.
So serious. I'm being serious.
So if I give you, like, let me ask you this, if I give you my trade information right now, can we put a number on it today and then tomorrow you'll increase it by 25%, or sorry, April 3rd? So if I give you my trade now, you'll give me a number and in 2 days you'll increase it by 25% because you guys are going to be able to charge 25% more for it. Can we do that? Can we do a number now and then you'll increase it 25% in 2 days?
Hey, Tommy.
Yeah?
25, no, your manager name is Tommy too.
Oh, awesome.
25% on the tariffs on Thursday? That's a general sales manager who just walked by my store. I mean, right by my office. I don't know if you heard him.
Okay, and this car is assembled in?
This car, let's see, this is a T, so this is Canada. Let me see.
This is a 2. This is a 2. Oh, 2T, okay.
Or 2, I mean.
Yeah, 2 is Canada, yeah.
Ontario, Canada. Okay. Cambridge.
So you're saying, if I call you guys, I feel like you guys would be desperate to sell this car. Nobody's going to buy it at 79 grand.
Why not?
You guys should be desperate to sell this car because nobody's going to want to buy it at 79 grand.
This is a chance for everybody to get a car.
See, we're both playing chicken. You're hoping you sell this car in a day and a half. If not, you guys now have a piece of metal that's 79 grand.
I'm not playing chicken. The president of the United States, he's not playing around. He signed the bill on national TV.
I understand how tariffs work. Yeah. Totally good, but that's not cars don't just increase by 25%. It's not how, like, Toyota did not make any internal announcement saying that all of our cars are going up 25% as of Thursday. I'm glad that your president's telling you that. That's cool. But that's, like, again, and if it does, you guys are, like, Lexus and Toyota are royally screwed because nobody is buying a Tundra at $110K, you know?
They said that during 2021 and 2022.
They weren't 110. Right. The MSRPs have increased from 2020 to 2022 already 40% than what they were back in 2019. So because MSRPs have increased 40%, well, yeah, of course, yeah, people are paying the prices today because the MSRPs have increased. This car 4 years ago was, what, 10 grand less expensive?
No, what I mean by that is there were addendums that nobody was haggling on 2021, 2022.
Correct, but the MSRP of that car was 50.
Well, as you can see there, I provided all the proof. Put in the chat or in the comments who took that first round. I think I did an excellent job on that first round, and I think I took that first round as opposed to what he did. But I want to hear from you guys. You guys are going to be unbiased, so let me know. And let me go ahead and do some special shout outs here. I got my man Chili Davis. He's in the chat letting me know what is going on, and he is one great subscriber. He's always in tuned. And let's go ahead and shout out some new people on the channel. We got Uris Strong. He subscribed. We got Derek Moland. He subscribed. Let's see. We got Jayla Duncan. I think she's a she. She subscribed. Let's see who else we had subscribe here throughout this week. We have Nakiti43. That subscribed. That's what I'm talking about. Let me see. Yup. Those are the people so far that have subscribed this week. I want to thank you guys so much for choosing me. Honestly, I really feel privileged that you guys chose my channel to go ahead and subscribe. I'm hoping I'm able to give you guys the service that you guys are looking for when it comes to building your credit, rebuilding your credit, and getting you approved. And again, don't ever hesitate to reach out. Anybody that I did not call, because I'm just going based off my notifications, let me know. I'll shout you guys out. I'm appreciative of all you guys. I do this for you so you guys can be educated and then be able to be well prepared for the approval process. But let's go ahead and get into round 2. Me versus Lucky. Round 2, baby. I'm about to body him. Let's see. And this is live too. This isn't pre-recorded. Well, obviously it's live. Well, obviously it's not pre-recorded is what I meant. But you guys know what I mean. Let's get into it. All right. We'll go ahead and let Mr. Lucky take the field. All right, Lucky. It's up to you. And that is awkward. Okay, yeah, let me unmute that. Run it back. 'Cause I don't want nobody to be like, I cheated.
What's going on, YouTube family? Today we're going to be talking about how banks get you approved for auto loans. Now, the reason why I'm doing this video is because I had such a massive feedback from our last video talking about how banks actually love lending to immigrants, especially the Latino community, because of how they charge higher interests and how they're more likely to pay their bills than the average American. So after doing a lot of truth bombs in there, I figured I'd give you the rest of the spread of how banks actually work, how do they rate you, and how they can actually judge you in certain ways you had no idea was even possible. So I'm hoping this video will clear some of the air, because a lot of the things we're going to cover are going to show the massive discrepancies on where you actually buy your car, how different states actually approve you, and where you actually live can go against you when it comes to buying a car. Now, I'm sure you guys have heard stories of like, hey, I tried to get a car in my own backyard and whatever, let's say the state of California, they said no, but then you go to Texas and for some reason every bank wants to lend you money. Why is that? It's because I'm going to give you all three reasons on how banks rate you. It's going to be by the person, the individual. It's going to be represented by Batman, the vehicle itself, which is the actual G-Wagon here, and of course, at the end of the day, the dollar, because this is what's going to make the deal happen. So let's go ahead and start off with the individual. Now, this is the very first step of getting your auto loan approved. We're going to look at you. Now, obviously, we're going to look at your credit, but not all credit is the same. The biggest misconception is people thinking if they have a high credit score, for some reason, somehow, they're going to get approved with 0 down and super low interest. That worked back in the day when there was a lot of auto approvals. They basically just set it at anything above 710, you would get automatically approved for a low rate. Well, now they want to actually see what type of credit worthiness do you have? Is your trade lines your own? Are they authorized users? Do you have credit cards over $10,000? Or all your credit cards like $500 store cards? Do you have multiple auto loans paid in the past? Are you current on your thing? Do you have any tax liens, any bankruptcies, any child support? All these things are really factoring in because for the last few years, banks have been hit with massive amounts of fraud. So they are going to double check and triple check everything just to make sure that you are a qualified individual when it comes to credit. Now, after you get through...
Shut up. My turn. Nah. Let me go ahead and give him his prop. Let's give him a nice little clap for this L that you're about to take. Let's get it. All right. So what he mentioned is, I'm going to say it's halfway right. So essentially, even before 2008, you could still get credit easily. And even today, even at my job where I make decision on loans, it is still fairly easy. Like in the last 2 employers that I've worked so far at this year for loans, none of them have changed their underwriting practices. I noticed after watching The Big Short, if you have not seen that movie, that's essentially what happened during the mortgage crisis of why 2008 happened. Essentially, everything was a lot loose. A lot of things weren't getting verified. So after that, like things started becoming a lot more harder to get, quote unquote, because now verification was happening. Before 2008, barely any verification was happening when you were applying. So this whole thing that like it's easy, like it was easier before. No, it's always been easy. It's just when things start to go wrong, that's when the lenders change how they will approve somebody. Because honestly, I really thought they would just change the information as the economy is going bad. Because right now we're not doing good, as you guys have seen. People are losing their jobs. People are going delinquent on their loans, repos, high credit card debt. But even at my employer, they're not changing the underwriting, which I think they will once they see stuff bad starts happening. So I don't agree with him on that. What he was talking about, like authorized user, $10,000 credit card, your previously paid autos, like that stuff is important, but it's not like the meat and potatoes of what gets approved. We don't care about authorized user as a credit analyst. Like, that has nothing. We literally ignore that. We don't count it. We know that helps inflate your score, so that's why we don't give nobody no credit for that. So what we really essentially care is what's the best thing that we care about is the auto loan history. We wanted to see how your auto loan history was really overall. So that's really what really matters here. And when it comes to the loan process, we care about income, stability, credit mix, loan to value, and other things which we'll get more into depth here in the future. So that's pretty much, when it comes to the loan, that's really what it's really what really matters to us. So yeah, let's go ahead and continue. Let's let him continue saying whatever he says, get off his chest.
Through that scrutiny, and you're figuring, okay, I got a good credit, I got a good base, let's go to the next thing, which is proof of income. Now, this is another thing that was really bad with fraud. People would make fake pay stubs, fake W-2s, bring fake bank statements. All that stuff used to pass a few years ago. It does not anymore. We have things like LexisNexis, Plaid, that will actually connect to your bank account and let me know exactly how much money's came in and out in the last 365 days. So I can tell flat out who the biggest bills are, where your money's going, and how you're making your money. So if this does not match up with your pay stubs or your W-2s or your fake bank statements that you brought in, you are automatically going to be terminated. On top of that, they're going to look to say if you worked at Bob's Pizzeria, but on your credit report it says, Jose's Taco Stand, they're going to be like, hey, why are you working at two different restaurants when you said you've been at this one for a year? They're going to want to know why. They're going to ask that question. Now, some of the banks will go ahead and rewrite your deal, but some banks will automatically deny you because they think you're lying. So you have to be really firm on what you're doing. Be just honest. If you just started a new job, put it on there. There's nothing wrong with that, but they want to see some sort of stability. Also, some banks now are requiring 6 to 8 months on the job before they approve you for anything over $35,000. Now,
okay, let's go ahead and stop there really quickly. Okay, so essentially, all right, where do we start? So the consistency about your employment, unless he's going to get into this, hold on.
The next is proof of residence. This is a really big one because once again,
Okay, yeah, so it looks like he went ahead and mentioned it. All right, so essentially he's talking about employment and how it needs, actually no. Never mind. I do not want to put my foot in my mouth, so let me run that back.
Job, put it on there. There's nothing wrong with that, but they want. On top of that, they're going to look to say if you worked at Bob's Pizzeria, but on your credit report it says, Jose's Taco Stand, because they think you're lying. So.
Okay, yeah, I was right. Okay, so essentially, I get what he's saying, and there's something to point out in this video. What I don't like that he doesn't mention is what kind of finance companies is he talking about. So there's two types of lending. So there's one that's called indirect lending, that those is when you go into the dealership and apply and they send your application everywhere and you have like 10 million inquiries. And then there's direct. That's when you go directly to the lender and apply. So what he's talking about is indirect, which I wish he would have pointed that out, because I think it would have hit a little bit harder if he would have. When it comes to indirect, they're a little bit more what's it called? They're a little bit more harsher, because a lot of lenders are there work with people that have bad credit. So they will do things like that, but like most banks, credit unions, and other financial institutions, other financial institutions that I think that maybe don't go as deep that I would know would be just Capital One, because Capital One is a bank at this point, and a lot of the other financial institutions like One Main, Westlake Financial, you have Credit Acceptance, they're all bad credit individuals. They work with people with bad credit. So that's where he's tailoring to. But overall, even when I worked at an indirect lender that worked with people with bad credit, at least from the processors, they never went that deep, as in like even wanting to deny somebody. Like if I looked at someone's loan application and I saw that there was two different type of employments, that can mean a couple of things. That can maybe mean, hey, he has a second job. Huh? Lucky, you ever consider that? He may just have a second job. Hey, he may have just started his new job, right? Also, there's no context when it's stated he started this other job, right? Another one, he can be a co-owner. It may be the owner decided to want, maybe they came to an agreement that we're going to call it Jose's Pizzeria or whatever he was calling. Like, he can be a business owner too. There's multiple reasons, but we wouldn't just flat out just deny you because of it. So that's what I don't like about that. It's like, no. And the thing is, he's marketing this as, this is how you, these are the secrets that banks don't tell you. I've worked for 2 banks. I've worked for 2 credit unions, and then about 3 financial institutions. So I've gotten to really be a lot around the area and the industry of different type of lending and underwriting, and none of them ever had to like, oh, turn down because your address, because your employers are different. All we'll do is, hey, we'll just stip for income. There's systems already in place, like he mentioned. There's something that's called the work number, and the work number, can verify how much money you're making. Your employer, how long you've been with them. They'll verify that information. So we don't need to rely so much on that because we have access to this different type of information. Next, LexisNexis. That is something to be aware. That is a great way for us to be able to look out for fraud, for individuals trying to defraud, or sometimes there are mistakes, and we need to use that to verify to make sure that whoever's applying, they say who they say they are. So I was like, I'll give them kudos. So that one's a little hard, but I think I gave them the nice bottle. What is it? Bob and weave. There we go. I gave him a nice little bob and weave and gave him a nice little jab right there real quick. So yeah, let me know. If you're new to the stream, make sure you like. If you're subscribed, see you guys on future lives. To put your questions, I'll be getting them towards the end. Let's go ahead and continue.
You have to be really firm on what you're doing. Be just honest. If you just started a new job, put it on there. There's nothing wrong with that. But they want to see some sort of stability. Also, some banks now are requiring 6 to 8 months on the job before they approve you for anything over $35,000. Now, the next is proof of residence. This is a really big one because, once again, because of the pandemic, everybody moving around, all the crazy fraud, they want to make sure that you live in the residence. So they're going to run it through LexisNexis and see if any of your power bills are in your name. And if they are, great, you shouldn't have any issues. But if they're not, they're going to ask you for copies. And now they're starting to verify. There's a lot of companies that have third-party websites where we can call and say, hey, does this guy have, power with NV Energy? And I can give me your account number. And if the account number doesn't ring through and it doesn't match the last name, we know that you're pretty much full of shit and you're lying and you're just trying to push through the loan. So everything we're doing now is really get tuned down to getting.
Again, I don't know if that's necessarily true. Again, I've never had to did that when I worked at other financial, at the indirect one. I never heard of them ever having to collect that. And if it shows a different name, then we're gonna not give you the loan. Again, if that happens, this is what a credit analyst would do. We'd be like, oh, it's in someone else's name. Okay, we would talk with the member, be like, hey, who is this person? What is their what is it called? What is their connection to you? Like, if they say it's a girlfriend, great. Then we would just get other verification, being able to go ahead and verify their address. Like, we're only because it comes back to another name. We're not gonna immediately decline the loan. We're gonna try to get as much. We're gonna try to give you as much chances to verify. You say where you say you live. And if you can't, then yeah, unfortunately we will. But it won't be like, oh, strike one, you're out. It'll take a whole bunch. It'll take a whole bunch of innings before we just say, hey, why would we want to turn down money as a lender? We want to make sure we did our due diligence and we verified everything great before we go ahead and turn you down, right? So I don't agree with him on that. Like, there's no point of us turning you down and then losing out on potential money for the company. That's just not great underwriting and business practice. But let's get back into it.
You approved. Now, once they get all that stuff together, proof of income, proof of residence, they make sure you're not bad, and they talk to all the other banks, seeing that you don't have any other pending deals because you have multiple, let's say, hits on your credit because you've been running around every dealership trying to get approved. Once they look at all that, they're going to give you what's called a rating. And let's just for sake, every bank has a different rating system, but let's say it's 1 through 10. They're going to give you a risk rating.
Vrade gently grows each diamond in our zero-emission foundry, right here in America's Pacific Northwest. We control every step of the process, because at Vrade...
Oh, so another thing that gets involved with your risk rating is where you live. Now...
Okay, let's go ahead and touch on that really quickly. So the risk rating, let me go ahead and give you guys some inside secrets. So I'm going to go ahead and show you top secrets information that no one gets to see. So when we're referring to the risk rating, so the risk rating is pretty much, look at it as a tier. So it's a tier of pretty much, look at it, let's use educational grade. So like an A, B, C, and D. That's what he's referring to when he says like a risk grade. So someone that has a 740 and up is considered A. Someone maybe that has like a 720 or 700 credit score, they're B. C would be like 650 and above. You know, so it would be like a certain credit score range, and obviously you will just get down to other ones. So I'm going to go ahead and pull up a risk rating so you can have somewhat of an idea of how that looks and why you get the credit score that you get from the lender. This is, again, no one is doing this. No one is doing this. This is what makes me so different and so great at what I do. Is I'm giving you these secrets so you guys can educate, so you guys go into it, you guys understand. That's why when you see the advertisement for, hey, let's get loans. Let's go ahead and get loans for, or when they're promoting the interest rate, where essentially saying, hey, you can get an 8 like you can get a 5% interest rate on an auto. That interest rate that they're showing for their A tier. So your 740 and above credit scores. So that's where that stuff falls into. But what I'm going to give you is what they don't show you is essentially your the different tiers, different interest rate depending on your tier. So let's see, where are you? And this really, honestly, really just came quick into my mind. I know you're here. Is that here? No. No way, that was here. Is that in 2021? Oh, I guess it was in 2021. Alright, let's see. Sorry guys, I did not expect this. Policy limits. This one? No. Almost there, I promise. I think I may have found it. No. These are different things. Where are you? I know you're here. What's this? Nope. Wow, this is embarrassing. This is crazy. Go ahead and put your questions in the chat. Remember, I'm going to answer them towards the end of the stream. So so you can go, to go ahead and make sure you guys make sure that your credit is always increasing. That's always my job on this stream, is to go ahead and be able to help you and increase your credit score, because that stuff is very important. Like, this is stuff that school lacks big time, and I just want to be able to be that lending hand to be able to help you and achieve your financial and your credit goals. So go ahead and make sure you do that, and I'll be able to help you. I'm sorry, man. I don't know why. Insurance. The fudge. Oh, I want to curse so bad. I want to curse so bad. Let's see. Is it this? No. Policy. But it's not this either. I just checked. Oh, this is so embarrassing. I can't believe I don't know where I put this. Has an attachment. Let's see if I remove that. Hello, it's me. Play stubs, snippet, nope. So report. Okay, so this is probably going to be the best I can do for now. This is actually for a mortgage product. It's not the one that I wanted to show, but it's a variation of it, but it's essentially the same thing. I'm so sorry, guys. This took so long. But it is what it is for the time being. Let's see. I'll try to find it so I can do a better illustration. But, well, I guess you guys were able to see that there. All right. Well, anyway. All right. So this is essentially what it is. So this is would be what would be the credit rating. So depending on where your credit score is going to determine the interest rate. So look at 720 and above as the interest rate. So obviously once you start going under 680 credit score, so anything between 660 and 679, you get this interest rate. So that's what he's just meaning when he's talking about the credit rating. So I'm going to actually leave that there because I kind of got lost in the fucking sauce. I'm so sorry that took so long. It made me lose my train of thought throughout this video, but let's rewind it a little bit.
a proof of income, proof of residence. They make sure you're not bad, and they talk to all the other banks, seeing that you don't have any other pending deals because you have multiple, let's say, hits on your credit because you've been running around every dealership trying to get approved. Once they look at all that, they're going to give you what's called a rating. And let's just for sake, every bank has a different rating system, but let's say it's 1 through 10. They're going to give you a risk rating. Oh, so another thing that gets involved with your risk rating is where you live. Now, not only will it tell us like where you live, but it'll tell us the type of demographic that you are. This is how banks basically can cut out people without being racist. So if you live in a predominantly Hispanic, Black, Asian community or white community, they know it. And so everything has a demographic rating to it. It sounds funny, but this is how they can judge people, because legally they can't do it by race, but they can do it by zip code. So if you live in the ghetto, they know it. And so they're going to look at all the other people in that area they're paying. And if they're not all paying, they know that you're probably not going to be a good paying customer. So if you're thinking about getting a car and you live in a bad area, try to use your grandma's zip code and maybe move some of your bills over there and hopefully pass that test. But this...
Nah. I ain't gonna let you slide with that one. I ain't gonna let you slide with that one. Are you kidding me? You know what he's saying to people like me, credit analysts, and other credit analysts, that essentially we discriminate. Are you? Oh, you were so lucky this is YouTube and I can't curse. For you to sit here and call us unethical, how dare you, man? Clip them. Clip this clip. You're gonna go viral for this. Ain't no way you just told us that we're unethical. I'm not gonna sit here and be naive and think that it hasn't happened, but for the sheer fact that you are saying that, I feel type of way, because even though I'm not one of those people, you're still talking about us credit analysts and loan underwriters. Yeah. Not gonna slide. I get what he means. What they're doing is called redlining. So redlining essentially means that they're just like you said, they're discriminating based off neighborhoods. So that's a huge thing. That's a no-no. And then there's also something called Regulation B, which is equal credit opportunity for everyone. So that is illegal for us to do. And what I will do is anybody that's been in that position, clip this also. Anybody that's been in this position and you felt that you were being discriminated based off. Okay, so this is going to be a little bit long for me to explain, but in order for you to protect yourself, this is information you truly need to know, because not a lot of people can be like, oh, the bank, the financial institution is discriminating against me, but you don't know how to prove it. This is how you can improve it. And again, I'm a credit analyst. This is what we do. This is how you can tell if you're being discriminative. So what you need to do is like, okay, first you have to understand your credit score and where you fall. If you're in the low 500 credit score, don't be surprised if you're declined. But if you're like in like the 700s, like, yes, I'm not saying that if you're in the 500s, you still can be discriminated. But the thing is, so then let me take a step back. Let's do, if you're just in general, if you're being discriminated, you got to look at your credit history. Unfortunately, it is not always black and white how a credit analysis is done to be able to determine credit, because it is also a judgment call that we will make. But how you can tell is, as long as you don't have any delinquencies, and take this with 90% accuracy, because like I said, every institution has a different way of how they analyze and approve you for a loan. But I can at least give you a general sense. So as long as you don't have any like late payments within the last 12 months, no collections or charged off loans in the last 12 months, not a lot of debt. So I would say here's a couple examples of what I mean a lot of debt. So let's say if you make $40,000 a year, that you don't have $40,000 of debt. That's a lot of debt. So understanding that, that's what I mean. But let's say if you make a lot more money, let's say if you make $100,000, like you having $70,000 of debt, that's a problem too. So from a credit perspective, that's how you can tell if you're being discriminated, for you to be able to see those ins and outs. Other ways outside of that is doing a debt to income ratio on your own. So what you need to do is grab all your monthly payments that you pay that are reporting on your credit report. So not your subscription, your car insurance, your grocery bills, that doesn't go into your debt to income. It's only what gets reported on your credit. So whatever the monthly payment is, you divide that by how much you make, and as long as you're not over, I'm gonna say 45%, because people that tend to have a lower credit score, lenders will have a lower DTI, which makes it easy for you not to be able to be declined. Like I'm at current lender, if you have like what is it? I think it's a 580 and below. The max DTI on a car is like 45% that will go. So essentially, you'll do all your debts divided by your income, and we'll do an example here right now. Let's do an example. So, all right. So let's just make a random amount up. Boom. Let's just say that's how much you pay in a month, right? 4,651. We divide that by how much you make. So let's just throw in a random number. Let's say if you make that much a month, 7,865. You do the debt divided by the income. This right here, anything under a 0, that means it's less than 100%. Anything over a 1 means it's over 100%. And if you want to get a percentage wise, like minus all these numbers, you should do times 100. And let me see if we do, 100 equals 59. So I guess if you wanted to move the decimal over, so your debt to income would be 59% essentially. So if you had like a credit score under 600, this would be way too high. They would decline. So that's essentially how you do it, a debt to income. So you ask them like, hey, what is your debt to income for my credit rating? You tell them that, you're gonna catch them off guard, because they're gonna be like, he knows what he's talking about. Why? Because you were subscribed to my channel. Let's go. Again, no one's breaking down this information like I do. Stop playing with me. Like, comment, subscribe. Put your questions in the chat. If you're trying to go ahead and get better at credit, my channel is for you. I'm giving you the secrets, the education, and helping you get approved for loans. Stop playing with me. Let's continue. Okay, so great. You'll do a DTI. If they tell you no, it was in your DTI, it was the car. You tell them, okay, what is the minimum year required on a car? Normal lenders like banks, credit unions, and places like Capital One, they have like a 10-year gap, I think is what it is. Yeah. I was like, maybe even a little less. Like, I think my lender only goes to 2017 currently. So some will go to 2015. Sometimes they will go older, but like at a bank where I work, they would do older vehicles, older than 10 years, but it would be an exception. So they give you a number. Okay, you're like, all right, well, and then you can ask them like, do you guys do exceptions on the year of the vehicle? Which again, that's where it can be another gotcha moment. Let's just say loan to value. You tell them, okay, well, and then what you do is you can ask them next, how much did the car value? This is how you're gonna stick to the collateral, and you see if it was because the loan to value was really high, because that's one way people get tripped up, is that they understand that, they may have really great credit, but because they have a really high loan to value, they won't get approved for the car, because the car, they're just asking for too much for the car for the reasons, right? So let's say if they say it's 10,000, okay, let's say if they say, well, you're only financing 7,000, that means you're financing less than the value. That would only put you at 70% LTV. So essentially how you calculate the LTV is going to be the amount you're financing divided by the value. So let's do another example. So we're going to do how much you're financing, 7,000 divided by 10,000. That equals 0.70. The same thing with DTI. If it's under 1, it's less than 100. And if you do times 10 or times 100, whoops. 7,000. Oh, let's just do Okay, we can just do that. So 0.7 times 100 equals 70, and that would be 70%. So that's how you calculate the loan to value. And yeah, so that's one way. So that's how you're able to, with those steps. I told you it was gonna be a little long. So a little recap. So essentially, how you can find out if you've been discriminated is looking at your credit. Make sure you have not been delinquent, any collections, repossessions, charge-off loans in the last, I would say, up to a year and 6 months, right? You don't have excessive debts. We can look at it from an income base. So if you make $40,000, doesn't mean that you're $35,000 in debt. That is, you're up to your eyeballs with debt. And then if you make $100,000 and then you have $70,000 in debt, that would be so much debt, because also you're not paying it down. You would have a high credit utilization. You would be in the 80% and above. So yeah, so that's how you do it from a credit, from a DTI perspective, doing the calculation, doing your monthly debts on your credit divided by your income. If that checks out, then doing a loan to value, which is amount financed divided by value of the vehicle, asking additional questions about the collateral, like, okay, was the year within the guidelines? Could you guys have made an exception? And then also, one thing that just crossed my mind, down payment. If you're putting a huge down payment, which is really what's going to bring that loan to value down, unless the dealership is going to give you finance, is going to sell you the car less than the value, which we know that rarely happens. That's also a huge factor, because if the car is worth $10,000, but you're putting $5,000 down, you're putting half of the money down. Why are you declining me? The risk isn't, risk. The math ain't mathin', the risk ain't risking. So those are ways for you to be able to say. So I'm very offended he said that about us. So yeah, we gonna clip that. See if we can get you to go viral off that ridiculous comment. All right, next, let's talk about what he said about being at your grandma's zip code. So now he's being unethical himself. So in one way, he's saying in the beginning of the video, hey, be honest with them, especially about your job. Like, if you have a different job, just tell them. But then he's saying, hey, for them not to know where you live, be at a different zip code. So who's being unethical now, Lucky? Who's being unethical? You are. You're telling people basically to lie, which that is fraud on an application. Stop playing with us. Like, I'm not gonna let you slide with that. Like, if you say that they can verify your address through LexisNexis and they're calling for the power bill, why would you encourage someone to put a different zip code so they won't be discriminated when they can just find out where you live? Make it make sense. You get a good Tekashi 6ix9ine, stupid. This boy's stupid. Like, well, that made no sense, that comment. So it's like, how is he gonna get this? Like, he's contradicting what he is saying. So, I just wanted to touch bases on that, because yeah, that wasn't cool for him to say that we're unethical. So I'm at least gonna defend us, the credit analysts and the loan underwriters. So this guy. All right, let's get back to this video.
This is where a lot of people always say, well, it's illegal to judge somebody on race and to do this, but they don't have to. They just have to look at where you live in certain areas that you do. All the actual data they have is so in tune, they can tell you exactly a probability of what your nationality is, how likely you are to pay your loan, and what kind of customer you're going to be. That's how much money these banks spend on gathering data. So they don't need to know if you're black or white or whatever else. They can literally tell from what you do for a job, where you live at, and how you basically your spending habits are, and they can tell you exactly what you are and how much you're going to spend and how good you're going to be at paying your loan. Now, the next thing we're going to talk about is your actual vehicle. Now, this is also going to get a risk rating, and this is where a lot of people get screwed up at. Everybody thinks that because you have good credit, for some reason you get whatever car you want. Well, this score will actually outscore your personal risk rating. So if you have, let's say, okay credit, you're a first-time buyer, but you're a good person, if you try to go get a Mercedes as your very first car, they're automatically going to whack you with higher interest, a bigger down payment, or they're just going to flat out deny you. So I always tell people you need to buy what you're qualified for. If you're a first-time buyer, get an economy car, something that's cheap and affordable, hopefully something under $25,000. Once you build a little bit more established credit and you have like a $30,000 loan, you could bump up to a $40,000 loan. After that, maybe a $50,000 or $60,000 loan. For some reason, everybody during the pandemic, they were giving out all this money. They wanted to jump from driving a beat-up Honda Civic to a Bentley. And it just doesn't work that way. And it's nice to see that banks are going back to that. So when it comes to the risk emblem of your car, they want to see what you do for a living, how much money you make, and then they're going to tie that in with the vehicle. So like I said, affordable American, Japanese, or Korean cars are going to be the easiest and they have the lowest risk because the insurance is a lot less, the maintenance is a lot less, and you're more likely to pay for that car. Also, when it comes to luxury vehicles, we all love G-Wagons, we all love Audis, Mercedes, Cadillacs, all those other things. But one of the fastest fall-offs when it comes to depreciation is luxury cars. So if you bought this car for $80,000, you drive it for a year, and now it's worth $65,000. If you're a high net worth individual, you could take a $20,000 hit and it won't crush you. Where if you're a paycheck to paycheck type of guy working at Domino's Pizza, it's going to absolutely crush you. You're never going to be able to get out from this loan. You're going to have 5 years, you're going to be buried underneath it, and you'll never be able to get out of it. And that's what banks don't want to do. Now, traditionally, they didn't care. They would bury you under these cars. I'm sure you guys have seen tons of stories where people would come in.
All right, whoa, I wasn't even showing you that. Let me run it back. You guys heard it, but we're going to run it back. So you guys can, I guess, get the visualization. Again, I want to make sure we're being fair. We're being fair on this stream.
Screwed up at. Everybody thinks that because you have good credit, for some reason you get whatever car you want. Well, this score will actually outscore your personal risk rating. So if you have, let's say, okay credit, you're a first-time buyer, but you're a good person, if you try to go get a Mercedes as your very first car, they're automatically going to whack you with higher interest, a bigger down payment, or they're just going to flat out deny you. So I always tell people you need to buy what you're qualified for. If you're a first-time buyer, get an economy car, something that's cheap and affordable, hopefully something under $25,000. Once you build a little bit more established credit and you have like a $30,000 loan, you could bump up to a $40,000 loan. After that, maybe a $50,000 or $60,000 loan. For some reason, everybody during the pandemic, they were giving out all this money. They wanted to jump from driving a beat-up Honda Civic to a Bentley. And it just doesn't work that way. And it's nice to see that banks are going back to that. So when it comes to the risk emblem of your car, they want to see what you do for a living, how much money you make, and then they're going to tie that in with the vehicle. So like I said, affordable American, Japanese, or Korean cars are going to be the easiest and they have the lowest risk because the insurance is a lot less, the maintenance is a lot less, and you're more likely to pay for that car. Also, when it comes to luxury vehicles, we all love G-Wagons, we all love Audis, Mercedes, Cadillacs, all those other things. But one of the fastest fall-offs when it comes to depreciation is luxury cars. So if you bought this car for $80,000, you drive it for a year, and now it's worth $65,000. If you're a high net worth individual, you could take a $20,000 hit and it won't crush you. Where if you're a paycheck to paycheck type of guy working at Domino's Pizza, it's going to absolutely crush you. You're never going to be able to get out from this loan. You're going to have 5 years, you're going to be buried underneath it, and you'll never be able to get out of it. And that's what banks don't want to do. Now, traditionally...
All right, let's go ahead and take that break there. Okay, so we're going to go ahead and give him 2 claps. He did good. He did good. Let me do what I said I was going to do. This is a perfect way to segment into giving you those lenders underwriting guidelines and rules I was mentioning about. He said it perfectly. There's nothing more that I need to touch on that, but besides show you these rules. So let's go ahead and get into that here really quickly. So we have the underwriting guideline. Oh, look at that. That happened. That's always fun. There you go. All right. Come on. All right, you guys should be able to see it. Yep. I'm seeing that you see it, so let's go into it. So, he is right about that. We're about to get into now the nitty-gritty of what he was talking about. So yes, let's start off with he was right about the. Why did it go back? There we go. He was right about the underwriting, about the cars that they prefer. So this is a guideline that I was able to get my hands on for an indirect, how I mentioned how he was saying that, they prefer trucks, Hondas, Lexus, Acura, Nissan, Toyota, Hyundai, and Kia. They work with those vehicles only, and they'll make exceptions on the Mercedes, like he mentioned. So on here, that's what they prefer. That would be under here, under the prefer used for vehicles. So we'll break this from top to bottom. So we'll start with tier. Remember how we were talking about how he mentioned about the risk rating? This is the risk rating. So for tier 1, 2, 3, 4, and 5. So think about this excellent credit. Think about this worst credit, right? So if you're over here, this is the highest credit, the highest interest rate you'll get. This will be the lowest if you have the best credit score, right? With them, minimum income they need is 2,200 for joint 3,000, and then PTI. Remember how I mentioned that essentially PTI is payment to income, where essentially they'll only give you a cap based on your income. That's what that means. That 15%, that we're seeing here, it says either 15% or 650, whichever is lower. So let's say, if an example, you made $4,500 a month, 15%, you do that times 15%. This is another great way. These are secrets that I'm dropping. These are secrets. Again, no one is doing this how I do it. Give me a like in the chat. Come on, give me that like in the chat. I'm giving you the secrets. I'm giving you more than breadcrumbs. I'm giving you slices. God damn it. By the end of this video, you're going to end up having the whole damn loaf by the end of it. So, and then if you get me on your side and you're subscribed to my channel, I'm pretty much the bakery at this point. Come on. Damn, that analogy was crazy good. Damn, put another like. Yo, put hands up in the chat. Let's go. Let's get back into it. Okay, so how I was mentioning. So you're going to do your monthly income times 15%, because that's what that says. And you're going to do equal, so 675. So if we compare it to here, I said either 15% or 650, it's pretty much whichever's less. So that means your max monthly payment is 650. So regardless of, so an amount does matter, because they said the max that they will finance is 30,000. So if you max their max of 30,000, and let's say if you had a payment of 650, that is okay. Even if you had the loan for 15,000 and your payment was 650, which honestly really wouldn't make any sense, but I'm just saying it just so you can understand it. Let me know if you're understanding what I'm saying, or if you need me to repeat anything. Remember, I'm here to educate you. Outside of me just reacting to this video, I am also educating and giving you guys tips, giving you guys secrets of the process. So if you're new to my channel, welcome. This is how it's going to be in these lives. I'm going to try to give you these breadcrumbs, or in this case, I'm giving you the whole loaf in this stream. But, I was like, I'm going to try to give you more of these secrets so you guys can have a nice understanding. So let's go ahead and continue and go back to it. Okay, so that's pretty much what PTI is. We talked about DTI, but just in case if you're new to the stream, DTI, how you calculate that is your monthly debts on your credit report divided by your income, and that's how you get it. So this one says 50%, which I know is kind of hard to read, but essentially how you can do this at home is if you just do 1,000, let's say if you pay $1,000 in credit debt divided by your income, let's say if you make 2,000, that equals 50. If you times it by 100, you'll get 50. And if you look at 50 there, 50 is here. So that's how you calculate the debt to income. So this is how they do, and the dealership, they will charge them a $200 fee for every 1% that is over 50. So, and they go up to a max of 54%. Down payment, they don't require for you to have a down payment, but this is subjective. So what I mean is, so let's say with these type of lenders, they will give people that have bad credit. So sometimes people that let a car be repossessed in the last 12 months, they will require for you to put down a payment. I know I would. If that's how they underwrote, that they want us to be able to give people loans that have had repossessions, I would require you to put down 30% minimum. Maximum, I would probably maybe do 40, because I know most people aren't really going to get to 40, but at least 30. With 30%, that'll cover at least taxes and a good equity that if we have to repo, we at least are going to make money off the car if it needs to be repoed. So again, that can be subjective, but with this lender, it looks like they're doing 0%, 0% down. So this is the front end LTV, which is 100, and this is the back end, or altogether essentially is 120. So the difference between these two is that the 100% is going based off the selling price of the vehicle. So essentially the lender will go ahead and match up. So they'll grab whatever the selling price is, divide it by the value, and as long as it doesn't exceed that 100% that you are seeing right here, you're fine. And then it'll be the same thing with this. So the 120 is going to include if you do any extended warranties, any gap. Let's say if you do like the oil packages, you know, all that BS that dealerships try to sell you up on. If you do that, then that means you can exceed 120%. So they're willing to give you 20% more of the value of the vehicle for those certain products. And again, here, these are their preferred vehicles. So this is what they are looking for: trucks, Hondas, Lexus, Acura, Nissan, Toyota, Hyundai, and Kia. Those are the preferred. The max loan to value, I thought 120 was. 150 is the max. Holy shit, they're willing to almost give you 50% more of the value. Damn, that's almost double the the value. That's a lot. Crazy. We already said the max finance is 30,000, and it looks like the LTV is based off the tier. I'm trying to understand exactly how this tier is going. So is it saying that people that fall in the third tier max LTV is going to be 90%? That's what it sounds like. But I don't know. I would have to ask the person that sent me this. And then here, LTV program. No reserves, minimum 20% down payment required. 3 years on bureau, so that means they want you to have credit at least for 3 years. First time buyer, that's what FTB stands for. 10 on a case by case. So if you're a first time buyer, or if you have an ITIN, so essentially you have a social security, but it's only for. It's a social security number, and it's only for you filing your taxes. That's what that would be. So it looks like that would be an exception. Minimum income negotiable. Oh, interesting. Verification of income and employment is required. So they're always going to require. So let's talk about now their miles. So their miles will determine how long they'll let you have the car. So we can see anything up to about 50 miles, you can have a 6-year loan. Anything up to a minimum of 95,000 miles and a maximum of 105, you'll get 42 months. Look at that. Look at that. I am giving you the inside secrets. None of this has been exposed until today. Thank you. Thank you. Please, not everyone clap at once. I'm sorry. I'm tooting my own horn. I know. It's just great for me to be able to show people this information, because now they understand the lending practice a lot more, and they know how to protect themselves. Because that's one thing I don't like. And I'm not gonna be a blind eye and say that, hey, like, there hasn't been discrimination. Obviously, there's been discrimination throughout it's a big problem here in the U.S. So with this information, you're able to understand. So if you ever have to take someone to court, it's like, oh, because you learned from my channel, you're able to have that understanding. It's like, this is pretty much like lawyer work, essentially. Well, this is like equivalent to a lawyer. Like, the lawyers are going to know the inside and out, and I'm a credit analyst. I know the inside and outs of these loan programs and how they work. So, yeah, I'm happy you guys found my channel. It may have taken a while, but you found me. I'm hoping you're here to stay, and I'm able to go ahead and help you. Go ahead and, if you're new to the channel, welcome. Make sure you hit that subscribe. Make sure to hit that subscribe and that ring notification so you can always see my upcoming videos. We're not done. Just to let you know, that was just the front side. There's a back side. Let's go. I'm out here giving you this information because I'm killing it like Yeah, just in case you guys, a little about me. I used to dance professionally. I know I may not look like it. But yeah, I used to dance. I still get down. If you ever see me on the dance floor, you don't want that. You don't want that. You don't want that. Let me stop. This ain't a dancing channel. This is a credit channel. All right, let's get back to it. Okay. Let's see here. All right, so we got. All right, so this is the backside. So this is a little bit more into their underwriting rules and guidelines. So if it's a new vehicle, the max loan to value they'll do is 100% of the vehicle through the invoice. So this isn't them pulling value through NADA or Kelley Blue Book. See, look, Kelley Blue Book for used cars, Kelley Blue Book, or NADA Clean Trade. So that's essentially how, if it's a used, how I'll get it. Book ads, so ads only. So if they're going to add to the value or allow for you to add, it's going to be taxes, title, licensing, in addition to the front end. So if you need to finance the taxes and all that, which again, you should at least be covering the taxes. So again, you won't be so much upside down. Okay, so let's see what they say here. So the current model year used, not yet in the book, 20 miles max. So let me see, the current model used vehicles not in. Oh, okay. So that is essentially saying, so if it's a brand new vehicle and it hasn't been in like NADA or Kelley Blue Book. NADA is another Kelley Blue Book. That's like a competition. Think of it like Experian, Equifax, TransUnion. That's a way to look at what Kelley Blue Book and NADA is. They're just competitors of each other. So they're saying if it's not in there, the max they're willing to do is 20,000. The max miles they'll do is 20,000 and 90% of the invoice. If you're doing Gap, the max that the dealership can sell you the Gap insurance is $895. The max contract is $2,500. Your income, this is something that a lot of people don't know. This is secrets right here. So income, so your pay stub has to be within 30 days at least. Your employers, 2 years of verifiable history. If you have over 60 days, it's only considered on a case-by-case situation, which I assume a lot of people are going to run into the situation because of how the economy is. Residents, 2 years of verifiable history. All applicants living with friends, relative, or squatter will be subject to a 25%. That is something that people don't know, is whenever you put a 0 on your for your rent, some lenders will slap you with the 25%. 25% for your expense. So essentially what they do is, remember the PTI that I went over, the income times 15%. That's essentially what they're doing here. So imagine if you made $100,000 and you said that you didn't have any rent. They would literally put that you pay $25,000 a month in rent. Yeah, I think that's about right. Damn, that would suck so bad. This is why you gotta be honest. This is what happens when you're not honest. All right, let's get back into it. All right, so the vehicle. So this is the collateral. So this is the, what Lucky was talking about. So they only accept 2012 and newer. Anything that's 2011 or older they'll do an exception, but they'll charge the dealership a $300 fee. So that's when here's a little into their financing. So when the dealership tells you that you need more money they need more money from you, it's because it can be sometimes to the restrictions. I'm not gonna say it's all the time, but a lot of it, as you can see, like a lot of this comes down to the fees, because the lender will charge them for going outside their guidelines, which then they'll just pass it on to you. Look at that. I'm giving you the tactics that they use. Look at that. Lock in, baby. All right, so let's go ahead and continue. All right, we're good on that. Okay, so let's go ahead and continue. So that's frame by frame, all branded in salvage titles and odometer discrepancies, or even so these are on a case by case. So if it's a commercial vehicle, so that would be like a cargo van, like you're doing it for like Amazon and whatnot. A conversion van would be like the people that like to live out their vans. Exotic cars, like unfortunately a Maserati would fall on this, because a Maserati, you can actually get it under $30,000 with them, because they have really bad values. They don't hold their value really strong. But you can't have any branded title. Looks like you can have salvage titles. And they're stating that a Carfax will be pulled. This is their insurance requirement. Isn't really too important, but if you want to take a look at it, you can pause it. And this is important. This is very common with you guys weren't even watching. Or I guess it's more my fault. Okay, so anyway, so like I was mentioning, this is the commercial cargo exotic requirements right here. This is insurance. If you want to pause and take a look at what that is, I won't. It's not too important when it comes to doing a credit analysis to give you a loan. References. This is very important for you to know. This is another secret. These people are requiring 4 references, which are required, which include 2 family members, and they must live in 2 different addresses. They must provide all that information. So that's essentially the underwriting rules and guidelines. Again, ta-da! No one does this like I do. Let's go. Yeah. That's how I do, baby. That's how I do. So, essentially, the references, a tip on that. The reason why they ask for references is if you're past due or if you're hiding, that information pretty much lets them know how to find you. Just to let you know. See, again, giving you secrets. Wow. Let's get back into this video. We are almost done, I think. Nope, not that. Let's get back into this video. I'm killing it. Alright, let's see here. Damn, we're only 7 minutes in. Alright, it's all good. Alright.
They didn't care. They would bury you under these cars. I'm sure you guys have seen tons of stories where people would come in, owe $20,000, $30,000 more than what the car is worth, and they would just roll it onto the next car. Well, those days are over. Unless you have an 800 credit score and immaculate auto rating, they're going to flat out turn you down. They don't want to add more debt to bad debt. What I've seen a lot lately are people that are basically trying to trade in their overpriced inflated cars they're upside down in to buy a new car. The dealer's telling them no. They buy the new car, and then they give this other one back to the bank because they don't want to make the payments because they owe $20,000, $30,000 more than what it's actually worth. So the auto rating is getting very critical on you getting approved for a vehicle. So do not believe the hype. I hate it when people are like, as long as you have an 800 credit score, you can get whatever. And this is something else that's pretty funny that I know bankers won't tell you, and it's not written anywhere else.
Let me clear that up again, and boom, here's a nice little jab for Lucky. Giving him a nice little jab. He's referring to indirect. Even at the credit union where we're at, we won't really care about the type of car you get. You can go ahead and get a Lamborghini. The whole thing is, do you got the credit and the income for it? That's really what it matters. Where I work at. And even at the other place where I worked at this year, it was the same thing with them. They didn't care. But again, I'm not an indirect. I'm working at a financial institution, so which in case if you don't know what a financial institution, that's a place where they have banks where they have checking accounts, savings accounts, other products similar to a bank essentially. So that's essentially where I work. So they have a lot higher standards and have a different type of clientele. So that's essentially what what he's trying to. It doesn't affect you if you apply at banks, credit union, and places like Capital One, right? But maybe if you go with the places that I said, like Westlake, Credit Acceptance, Avid, Arrivo, these are all subprime lenders, and or subprime, and they work only with dealerships. I know Westlake, you can actually apply with them directly, but the other ones I mentioned, you have to actually go through the dealership. So, all right, let's get back into this video. Let me keep bodying him. Put in the chat who's winning this, me or this big-headed fellow.
They will judge you just like how they judge you off of race, nationality, and where you live on your vehicle. Perfect example,
sure.
Chargers. I have so many subprime banks that will not touch Dodge Chargers for the life of them because they know it's going to be an instant repo, it's going to be beat up, it's going to smell like weed, it's going to be trashed out. And it sounds funny, but when you come to the auction, you see the repo yards, they're all beat up, they're all destroyed. It's just the people that buy those cars just absolutely destroy them. Same thing like with Jeep Wranglers. They tend to basically work really well on resale markets, but some subprime lenders don't because they're worried about people going out, doing four-wheeling and rolling these things over. Another one is the older Hyundai and Kias, the ones that have the key problems. They know that they're more likely to be stolen than anything else, so they don't want to mess with them. And this one's pretty funny. This one's for my Latinos out there. Any older Chevy truck, because you could steal it with the popsicle stick. They do not like to lend on them, even though that's the number one truck that Latino buyers want, and most times they'll give 130 to 145% of LTV, which is loan to value. They'll give you all the money, but they're so worried about people stealing them because, like I said, you can literally steal an old Chevy stick with a popsicle stick. I'll show you one day in the video. It's hilarious. But, these are some of the things that, like I said, they're not going to be in bank books. The bank's not going to tell you. They're just going to give this car a very low rating for approval unless you basically counterbalance this out. If you live in a nice neighborhood, you make good money, you have great auto history, all these other things, the banks, like I said, they don't want to judge you on your person, but they can tell overall and paint a picture of who you are, where you are, and what you're going to be doing with the vehicle. Now, the last thing, of course, is...
He's not wrong. There's not really much to add because I already touched bases on it. I'm out here beating him. Put it again in chats. Who's winning this round? Who's winning this round? Okay, whew. Gotta make sure.
Is always the money. And this is one that everybody screws up. Once again, if you have good credit, everybody thinks that if you have great credit, you don't have to put any money down. You can get whatever vehicle you want.
Beat the family curse of
I've seen so many people get denied for really nice luxury cars, exotic cars, because they had a 600 to 800 credit score thinking that they were the man and they paid all their bills. It doesn't work that way. They're looking more at history than anything. It's credit worthiness. How much do you actually have deployed? Now, one of the things I was always proud of is the fact that I started with a $50,000 car.
Yes and no. Like, again, if you're going... So, let me elaborate what he's talking about. So, if you have a great score, like not necessarily like an 800, let's say if you have like 720, 750, 770, you could still get away with not having to put any money down. It just depends on how much you're financing. So let's say if you've only had $40,000 of cars, we know as credit analysts you can handle $40,000 cars because it shows on your credit report that you've paid many years for different types of cars at different amounts, but the maximum you've ever had is 40. I won't require you to put down a down payment. You already You already demonstrated to me that you can handle it, which shows me credit worthiness and stability. That's very important to us as credit analysts. Are you stable? Are you going to be able to continuously make these payments on time? So yes, but let's say if you were jumping to like a 65 or $70,000 car, that's a little different. That's where yes, we will require you to put down a down payment regardless of where your credit is. You can have excellent credit. Yeah, we're gonna still want something because we gotta be able to mitigate risk. That is the job of a credit analyst and slash loan underwriter. Is we're trying to be able to mitigate risk and find loans that people will pay for the term of the loan, so the financial institution can make a profit. That's part of why we do what we do. So I just wanted to provide that. I think I got one over on him because again, he didn't touch more depth into it, but I did. Let's go. All right, let's get back into it. Oh shoot. Oh no, don't tell me it froze. Okay, so we are good. Shoot. It's just frozen on this end. Hello? Shoot. Alright. Dang it. Give me one moment. Un momento. Dang. I think something happened with my software. It is buffering. So let me see what is happening. Says that it's still good. Alright, I'm only at 44%. I don't think I'm going to touch bases on a lot of things, so let me eliminate some things here. See if we free up the RAM speed. Okay. Alright, I'm just trying to make sure, guys, that the stream is working. So far, it looks like it is, so... Because on YouTube, it's not... Oh, there it is. Uh-oh. I gotta see what's going on.
car and worked myself up to a $250,000 car. So I was able to buy an exotic car of my dreams and have all that cool stuff. And I was pretty much the only person I knew that had something like that. Today, it's a complete opposite. During the pandemic, any clown that made $20 an hour could buy a Lamborghini Urus. They were literally giving these things away to everybody that couldn't afford them. I used my friend as an example, had a $30,000 Honda Accord loan, and then they gave him a Lamborghini Urus for $230-something thousand. People buying Ferraris, R8s, Porsches.
Why is this guy capping? Like, ain't nobody going to give him a Lamborghini Urus that makes $20 an hour. Like, get the fuck out of here. Like, you bugging. You bugging. We'll do it towards the end of the stream to see how much they really weighs. I'm gonna laugh. He's about to get slapped in the face so hard. All right, let's go ahead and continue.
Maseratis, like they're just giving out crazy loans to people that didn't earn them or couldn't pay them. Well, now that the banks are basically seeing what they basically had and the exotic market is starting to fall apart because people are broke, they can't afford these things, it's starting to come back. So they want to make sure that you have credit worthiness, that you built up that type of rapport. So if you're going to get an auto loan, make sure that if you do a $10,000 loan, your next loan will be maybe a $15,000 to $20,000 loan, and just do it like in either increments of anywhere $10,000 to $20,000 more than what you're doing, and little by little you can build yourself up, because I believe this is the real way to go, because if you don't, you're going to get yourself in trouble, get into a lot of debt, and you don't want that. Now, when it comes to money, putting money down, always put 10 to 20% down when it comes to a car. Because if you put 10%, let's say you're buying a $100,000 car, that's pretty much canceled out just by sales tax. If you're buying a regular car and you're putting 10 grand down, it will look better to the banks. The higher down payment there, the less likely you are to actually do this. This is another risk score. They judge it by the deal. So they'll call the dealer, somebody like myself, and be like, hey, this guy with a risk of 10 wants to buy this car with a risk of 10. What are we gonna do to offset these two risks? Oh, well, the customer's got $25,000 down. He's been on his job for a year. He's a good dude. Bank's gonna look at me and say, okay, if you get this much money down, we're only gonna charge you $500 to do the deal and just make sure everything works out. Now, if let's say you only
Sorry. Ugh. He is right about that. We're not just going to jump anybody from a $40,000 to a $60,000 car. No, actually they would. But more like 70? No, we definitely wouldn't. That would be almost doubling what their monthly payments were, the amount that they have as an experience. So we wouldn't go ahead and do that. So I'll give them kudos to that. And the down payment is like king in cash. So you got to make sure to always have a down payment. It will be your saving grace of it can sometimes make or break the deal, because if you have a really low LTV, loan to value, then that will go ahead and help you. So yeah, so I was like, hey, not bad. He's not bad. Not bad advice. Those are the crumbs that I was talking about that he was going to give. Let's continue.
have $10,000, the bank's going to tell me, you know what, Lucky, we don't really like this deal. We don't trust the customer. We don't like the car. We're going to charge you $5,000 for the deal. So even though, let's say this loan's for $100,000,
No offense, but if you're thinking about getting a HELOC from your local bank, you're...
Still going to pay the $100,000, but the $5,000 is going to come out of my pocket because the bank doesn't want to risk it. And then on top of that, depending on how bad you are or how bad your credit is, let's talk about some people with bad credit. If they're worried that, hey, this guy's got a repo that's a year old, we don't trust him, we want a 3-month recourse, which means that if you default on any of your first 3 payments, I have to give the bank all the money back and chase you to get the car back. This is a real thing, and this is another reason why dealerships are going out of business, because people are dipping out with the cars and keeping the money, and it's just a bad scenario. But this is where it comes risk on your side. So when people are like, why does the dealer keep asking me for more money down? Why does he keep changing the deal? It's because nobody wants to buy your deal. There's something that's hanging it up, either because of your bad personal score, maybe the risk score on your car, or the risk score on the deal itself. They don't feel like they're in a comfortable position with the car. Now, when the money's flowing and the economy is good, you can see the risk scale move quite a bit. During the pandemic, money was flowing. Everybody and their grandma was getting crazy auto loans. Now that people are not paying, record high defaults, and basically the money sucked out of the economy, you're starting to see that credit news start to tighten. On top of that, one of the other things I'll tell you about working the deals with banks is every bank has what's called a lending wheel or a lending chart. They have this little parameter of cars, like, hey, from 2010 to 2025, cars with, 0 miles to maybe up to 30,000 miles. Some banks will do up to 100,000 miles. Other companies will like, hey, you know what? This bank likes Japanese cars. This bank likes German cars. Every bank has their favorite type of paper and every type of person, every type of auto loan, and every type of deal. And so this is where the dealership, if they're good, they can guide you in the situation to put you in the best scenario. Because if you come into my lot, hey, Lucky, I got a 700 credit score, I got 2 paid auto loans, but my highest loan is 20 grand, but I want to buy this $100,000 G-Wagon. Well, guess what? I'm going to tell you, man, you better bring 25 grand at least, so this way we can make this deal happen. Because most of these guys won't do this. They'll get you excited about the car, they'll stuff you in the car, they'll send you home, and then 2 weeks later, hey, remember how you only put $5,000 down? Yeah, we need another $15,000, we're going to have to take the car back. And you've already showed your friends, you've already showed your family, you put it all over social media, and now you're going to look like a clown unless you come up with $10,000 or $15,000 to basically pay the offset. And that's what dealerships do. But good dealerships with actual competent finance departments will tell you, if you have this type of credit, don't look at this car, look at something else. So if you've ever wondered why somebody will give you an $80,000 approval on, let's say, a Tahoe, but they won't give you a $35,000 loan on a used Mercedes or Cadillac, that's probably why. Is because the risk of the car is not worth it. The banks don't want to do it. They'd rather take a bigger risk on a more expensive car that's maybe American or something with less maintenance. And so that's kind of the balancing act that you have to do. Now that we've gone over all that, this is just the first step to get you approved for the car, because the bank is not done judging you. Once you get the car and somehow it's yours, you're able to get the car, you get your money with the dealership, you leave it with them, and now you got the car of your dreams, expensive car that's maybe American or something with less maintenance. And so that's kind of the balancing act. Go. Well, here's the downfall. every few months, depending on what state you live in, they're either going to do a soft pull on your credit. They're going to do LexisNexis to make sure that you're still at your residence. They're going to do whatever they can to make sure that you're taking care of the vehicle. I did a video a few days ago talking about how Uber and Lyft are actually repoing cars because it's against their policy. And people are asking me, well, how would they know? How would they find out? There's databases literally for everything. You could find this stuff online as well. So every time Uber puts out a list of cars that they have on their platform, or Turo, or whatever the case may be, delivery drivers, all that is accessible. So once they get that and they run it, they're like, hey, look, you said you weren't going to use this G-Wagon for commercial use. You're using it to, I don't know, do Uber or Postmates. They take it away from you. Hey, you know what? You had full coverage insurance on it. We saw you went down to liability. Depending on what state you're in, they could possibly take your car because their collateral is at risk, so they can take it. So that's another reason why you have to do this. So even after the sale, there's a lot you have to worry about. And on top of that, you know, you always want to make sure that you try to be as honest as you can with the bank. If you're moving, let them know you're moving. If you're changing jobs, let them know. Believe it or not, they actually like that. They know that you're honest and you're looking for it. Now, another thing that you're not going to find online or anywhere else, and if you know anybody that works at a bank, they can tell you, they'll have an internal score for customers.
He is right about that. So when it comes to, only because you got approved doesn't mean that it ends. Now the processors have to do their job. Now you got to verify the information you put, which sometimes can be the tricky part, but that's why we're here. So he's definitely right about that. So now we're going to need your pay stubs or however, whatever type of income you stated. You already got through the credit part. They'll verify your address and other documentation. So he's definitely right on that. I think that's about it for here. You guys let me know. I think I bodied him. I provided more value and I had a lot of great counterpoints to what he did. So you guys let me know. Let me know your thoughts of who took round 2. I think I did. And then also, ever since I made the video, he's made other videos like about credit. So about credits, about autos. So I thought it was a very coincidence he did this according to based off when I made my video, which is very interesting. But let's go ahead and expose him real quick about the Lamborghini. You thought I'm gonna let you slide on that? Nah. We're about to do that right now. So we're gonna look up a Lamborghini Urus. Lamborghini Urus for sale. Okay, let's copy that. We're gonna go to Google. Okay. All right, we're gonna do this 256,000 because I think he said it was like 200K. We need an auto loan calculator. Auto loan calculator. We're gonna have to google.com. Because this guy's capping so hard. I can't believe this. No, not this one. That's the one that sucked. Ah, nice. Wait, no. Let's do 256,000. No, they didn't do a payment for that. Yeah, because I'm like, yo, would you guys believe a $256,000 car, they would give it to someone making $20 an hour? Like, make it make sense, Lucky. Like, try again, jackass. And again, we're gonna find out right now. We're gonna find out. We're gonna find out and see. 84 months, we can do that. Trade-in value. All right, down payment. All right, so we're going to give him the benefit of doubt. We're going to say he's putting down 30%. So, 256, 500 times 30%. That would be 76,950. 76,950. All right, perfect. Let's do an magic. All right, so let me have you guys take a look so you guys can see. So essentially, so right now this is going to be the vehicle we do, a Lamborghini Urus, $256,000. We have a auto loan calculator. We're going to put down that he's putting 30% down, which ends up being 76,950. We have a loan term of 7 years at a 5.29%. His monthly payment so far $2,562. I think he may just make a little bit over that, but I don't think he's gonna make a lot. So let's take a look here. All right, gotta uninstall that. Macro free. All right, we're about to analyze the income. So remember, Lucky, you said $20 an hour. Let's see. Works 40 hours a week. We got $2,562 is what the monthly payment would be on that Lamborghini Urus with 30% down. His income is $3,400. Let's see. Yes, $3,466.67. So as you can see, that would put his DTI easy over 50%. Remember how I told you how to calculate DTI? This guy would not qualify. 2562 divided by 346667. DTI 73%. That's what you call exposed. Look at you. Boom. Knockout hit. Bam. It's over for you, Lucky. It is over. It is ups. It is GG's for you, my guy. Thanks for playing. I appreciate your time. Try better next time. As you guys can see, let's take a look at it again. You won't see that I'm capping. And I was nice. I gave him put down 30%. So, 73% DTI is where this person would be. Let's do 100. So 73, he would be pretty much at 74 for when we round up. 74% DTI. And again, he said $20 an hour. His words, not mine. This is how much the payment would be. $256,000 loan, $76,000 down payment, 7-year loan at a 5.29 interest rate. So, Lucky, you're lying. And we're going to clip this. Woo! We about to go viral. Well, there you have it, guys. I proved it to you that he was capping on that. Now, let's go ahead and get to the last part of the segment, which is the questions. Let's go ahead and answer a question that someone went ahead and put in the chat. All right. Here we go. We got from a person in the chat. Yo, this is the best breakdown I've ever seen about approving for a car. Where's the best place to apply? And I want a G-Wagon. How do I do that? That's what I assume it is. So let's go ahead and pin that comment. We're gonna pin that comment. Let me see. Replace the pin. We're gonna pin that question. Okay. So essentially, thank you very much. I appreciate you. I appreciate that. I do my very best to be able to try to help you guys. To answer your question, you want to get a G-Wagon right now. If you're trying to get one of this year, which is about like 200, close to $200,000. As you saw right there, you need to be making at least 2,500 at least, and you have to have comparable credit. So that means you've needed to have other cars of that loan amount. If you don't, the only way they're going to be able to counter it is you're going to need to come down with a big down payment. That was just 30% on 256. I think you can get away with that if you're going to do 30% down, but I would be sure 40%, your credit has to be spotless. You can't have a lot of debt. So let's say if you make, realistically, you have to be making a lot of money if you're going to say you want a G-Wagon. So I'm going to assume you probably make 110. I would say you have to be under 50K in total debt. So with credit card, other cars, personal loans, mortgage. Mortgage is okay. We don't hold that too much weight because we know people aren't really going to let their houses go, or at least majority of the time. So we won't count that against you. But auto and personal and credit card debt, that has to be under 50K. Just so we can be able to know, like, okay, this person knows how to, he has because that's kind of high debt still, but it's better than you being $70,000-$90,000 in debt and you make 110, right? We're not gonna give you a goddamn $198,000 car. Are you fucking kidding me? So that's gonna play a factor. Payment history, you can't have any past due within the last 30 days. You can't. You can't have any loans past due in the last 30 days. That's signs that shows us financial troubles, high credit utilizations. It's okay if you have like this is where credit utilization doesn't really matter too much. Let's see if you have like $5,000 of a credit card and that's your only credit card and you're 89% utilized. That's fine because it's only $5,000. But there's a difference between having $5,000 and $50,000 of credit card debt and you're 89% utilized. That's a problem. So credit utilization will be fine. You have to have other autos like I mentioned. If you have already an auto and this is going to be your second one, most likely we're going to want you to trade unless you have experience with multiple autos, don't know your situation very well. And that's how you would honestly really get approved for that G-Wagon if you just cover your bases with that. Debt to income, to add as a one more thing, try to be under 50% if you can with a car. Also, we saw a person making $20 an hour would be at 73. I think with the car itself, let me see. So if you, let's just say you make six figures, 100 divided by 12, that would put you at 8,833. How much was that car payment? 2562. So we're gonna do 2562 divided by 8333.33. So that would put you at 30% DTI with no other debt at all. So if you did have, I think you would probably be pushing close to 50. So with that solid advice, that'll definitely be able to help you get that G-Wagon. You can always do a consultation. Go ahead and go do a consultation after this, and I can definitely go ahead and help you. But definitely great questions. I don't think there was any other questions. I want to thank you very much, everyone, for taking time to come back onto the stream when I failed yesterday. And again, like, comment, subscribe. Link in the description to have a consultation call with me if you need help with building or repairing your credit. And I'll see you next time. YouTube recommends you watching this video will pop up. See you guys on the next one.